Hey, what's up traders? This is Taylor Horton with a free video for Thursday, June 9th. Alright guys, daily chart here of UNG, and I'm liking the setup. So for starters, we've had the green big three bars on the daily chart since mid-March. And ever since mid-March, this has been a good trend, and these pullbacks have been, I would say, pretty viable. So the big three bars being green means that both the weekly chart and the daily chart, we can't get a daily signal if the weekly chart doesn't line up as well. But the green big three bar means the weekly and the daily chart, they've got that ultimate combo of trend, structure, momentum, stacked EMAs, squeezes, 10x bars, all kinds of good stuff. Pretty much means everything is lining up for a continuation to the upside. And like everything in trading, not a guarantee. It's all about the probabilities. So, daily squeeze, green big three bars, green big three bars on the daily in the 4-hour, daily 4-hour squeeze. So here's what I'm thinking. One major thing you want to keep in mind, always check your weekly chart. Your weekly chart's going to give you pretty good context where, okay, you have a good looking daily chart. Where is that daily chart setting up within the context of the weekly trend? So the one thing we got to keep in mind, and this plays a role into how we make our risk management decisions, this isn't necessarily a fresh move. We're up here at like 2 to 3 ATR on the weekly chart. Granted, you were at 2 ATR on the weekly chart, back here at 20 bucks. So it's up like 50% since then. Just because a stock is at 2 ATR on the weekly chart, or really any other time frame, doesn't necessarily mean it has to pull back. It just means eventually it's a growing probability, right? Something you want to keep in the back of your mind. So, with the context of where we are on the weekly chart, what I'm looking to do here with the daily chart, and we picked up a little bit this morning, is try to build a long position for July expiration with an exit under the daily 50 SMA. Now what I like about the break of the daily 50 is it's a pretty good structure, pretty good shift of structure rather on the daily chart, and that probably is going to get rid of, at least in the short term, that probably cancels out the green big three bars. Cancellation of the buy signal at 3 ATR on the weekly chart pretty much means you want to jump ship, or at least you want to be ready to. But I think if this can at least hold the 50, and it didn't even test it today, so I'm just kind of giving you a big level to focus on. As long as this daily squeeze holds above that 50, I think you're looking for one more push here towards 33. The big Larry Bird, maybe a little bit of Shaquille O'Neal action at 34. Whatever your target, I think it's setting up for some more upside. But what I like about this morning's entry that we took, and what I love about this indicator is, this morning this thing's down like 5 or 6%. So that doesn't sound bullish, but you'll notice here you're down 5-6%. I still have my green bar. The big three bar is still bullish. That kind of makes sense of the mess, right? Okay, we're down 6%. But my weekly trend, my daily trend, my weekly structure, daily structure, my momentum, my 10x bars, my everything, still lining up picture perfect. Those are the kinds of dips you want to buy into. You want to make sure you're buying the dip into the best trend structure, with the most momentum at your back as possible. But from another perspective, what I like about buying the dip, something like UNG, it's only 30 bucks. There's not too much premium on the put side. There's not too much premium on any side, but I like to sell credit spreads. So what's nice about selling a put credit spread on the flush, as long as that flush is happening into bullish structure, if you view that as a buyable dip, you buy that dip or you sell a put credit spread. Today we're selling the 26 puts. So 26 strike put credit spread. Think of what's happening to that 26 strike put on this flush. That 26 strike put, the implied volatility is popping, the premium is getting pumped up, it's kind of getting inflated like a balloon. Assuming that trend holds structure, even if UNG just trades sideways, never mind go, from being down 5% to up 3%, and I'm not complaining, but even if it just trades sideways and holds structure, that implied volatility is going to drop down. All that caked in premium is going to get sucked right back out of that put. So granted, we caught a pretty big reversal, down 5 to up 3, but the put credit spread that we put on today, it expires, the July monthly expiration we've already collected 35–40% of the max profit. Not only because it made, not only because it made a good reversal, but also because we're selling that put as it's gaining a bunch of value. Then all the value gets sucked out and siphoned into our pockets. But that is a trade idea, guys. For those of you in the mastery, we might look to add to it. For those of you in the options room, we're probably going to look to do something similar here. But that is the game plan. UNG, daily squeeze, stack DMAs, green big 3 bars. If that can hold the daily 50, I'm looking for one more push towards 33, 34. Hope you all found that helpful. If you haven't already, please do us a huge favor. Hit the like button, hit the subscribe button, leave me a comment down below, and look forward to talking to you guys in the next video. Trade safe. What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.